Let's analyze the on-chain metrics, review some critical levels for Ethereum, and get into some trade entries. Hey everyone, welcome back to another weekly analysis of Ethereum. If you're new here, we take a dive into the on-chain metrics to help us gauge the direction of the markets, alongside a technical analysis and trade entries provided to us from the team at Coin Insights. Also, I'm very excited to announce that I've gained access to another funded trading account. I'm also looking to live stream my trades and make a series of growing this portfolio live at 1,000 subscribers. So if any of you are interested, please consider subscribing. We also have a free trading community, so if you're interested in joining a team of like-minded traders, feel free to hop in. The link is listed in the description down below. And as always, we'll provide timestamps for your guys' convenience so you can easily navigate to the sections that interest you the most. So let's take a look at how the liquidity heat map has been developing. And as I mentioned in my prior video, I said that we were likely to wipe out much of the sell side liquidity before we saw it move down. Now with the amount of liquidity lying below, a great assumption is to believe that we are hunting out the buy side liquidity at around 1680. Price action and market structure is also telling us the same thing, and I'll show you guys that on the charts when we get to our analysis. I also want to go over the liquidations for Ethereum. I always tell you guys that price action is always a hunt of liquidity, and before you see large moves down or large moves up, you want to see a lot of liquidity wiped in the opposite direction first. And if you look at the volume nodes of the short liquidations, you can see that there has been a huge wipe of leveraged short players before we see our move down on Ethereum. And now we're likely to see a lot of long liquidation before we see our move up. And we have our targets in mind for where Ethereum is heading. And once again, I'll show you guys on the charts right after these on-chain metrics. And the last on-chain metric I want to check for this video is the number of addresses with balances greater than 10k Ethereum. So a lot of Whale wallets have actually been picking up Ethereum. For example, you can see that when Whale activity is trending up, price action is trending down. So we can see a continuation of this divergence. So this divergence is actually a leading indicator that we are bearish in the near term. So now to check out the charts here, so market structure has broken. So you have this change of character here on the daily. And now we are just looking at price retapping into a lot of supply before our move down. In my last video, I mentioned that we were going to accumulate here before we have a wick of these highs and our move down. And I thought this wick of these highs would actually come above to fill up all of this sell side liquidity up here. But it didn't quite come into our target, and our trade entry did not hit where we had a trade planned that looked like this. But nonetheless, we had similar price action to what we predicted. And we're looking at a bear flag forming right now on a lower time frame alongside a bear flag here on the higher time frame. And for those of you guys who don't know, bear flags are, as the name implies, bearish patterns. Although we don't really trade off patterns in this channel, they are a good visualization of supply and demand. In the near term, we are likely to possibly even see a small push up before our move down. But something to note is that we are actually setting higher lows here. So it is possible for price action to come up and finish filling up a lot of this liquidity before seeing our actual move down here. So there is a possibility that we can get picked up on this trade, but I do not believe that we will break this high just yet until we wipe out a lot of the buy side liquidity and fill up a lot of the demand zones in these lower levels. So as shown in the liquidity heat map, these two zones of yellow are our zones of high liquidity. So in our analysis at Coin Insight, we're looking for price action to come down into this zone right here of high liquidity, also filling this daily order block here in green. The other point of interest that we have is this other zone of high liquidity down here, tapping into this broken base and possibly finding support on this broken base here. If we take our Fibonacci levels from this swing low to this swing high, you can notice that this demand zone also lies right in the Fibonacci golden pocket, which is another high zone of support here. This other lower level of high demand also lies right in the 0.786 Fibonacci level. So this is also another great zone of support that we could look for. A lot of algorithms are also run on quarterly levels. So if we check out the quarter levels here, so this lower level of liquidity also lies in the 0.75 and can find some sort of support here according to quarters theory. I also want to take a look at the moving averages, where the blue line is the 50-day moving average, the purple line is the 10-week moving average, and the red line is the 200-day moving average. And notice that price action is trying to find support on the 50-day moving average and the 10-week moving average. This is where a lot of stop losses build up going long. And therefore I believe a lot of the algorithms will actually end up hunting out this liquidity, creating a squeeze on the longs and forcing people to go short here into this order block down here. If price action is very bearish, I can also see one more theory of us forming a head and shoulders pattern, with price action moving here to the downside and testing this neckline here, forming a head and shoulders pattern that looks like this. The reason I believe that this theory is plausible is because we also have a CME gap in this lower area down here. So if you go over to the CME chart, you can notice that all of these CME gaps get filled almost picture perfectly down to the wick. Therefore, if price action is to come down here and fill up the CME gap, we can definitely see some sort of head and shoulders pattern forming here, retesting this neckline and either seeing our move up or our move down to retest the bottom of this range. I think it's very important to be unbiased in your analysis. So disregarding a lot of these lower levels, as many bulls are, I believe is unwise. So on this channel, I hope I can keep you guys all on your feet here and kind of open your guys' eyes up to all the possibilities for price action. So a lot of my trade entries have not changed here. If we are going to come up to fill up this fair value gap and all the liquidity up here, I am looking for a short down all the way down to this level here, taking profits in this order block or any of these zones of demand. In the long positions, I'll be looking at our entries into this order block with stops below this order block, as that would invalidate your trade. With profit targets targeting at least this high, another possible entry down here with stops below where the 200-day moving average is. And if you wanted to take a longer swing trade, you can even have a less sensitive stop and DCA your positions in whatever your trading strategy is and whatever your risk management strategy is, and also taking profits towards at least this high. And likely, if we get these levels, you can probably take profits much higher. If you find rejection in the zone down towards the CME gap, it might be a little bit riskier to take these trades all the way up, as price may retrace down to range lows, as we also do have previously mentioned higher areas of liquidity down here towards range lows. So if price action is moving towards the downside, this would also be an area to retest in the zone of high liquidity down here. If you guys enjoy this type of analysis, please let me know in the comments down below. Please consider subscribing if you guys want to see me trade live, or if you guys are interested in this content. Thank you guys so much for watching again, and I'll see you guys next time.